Hello and welcome to our look at the Wednesday, August 13th trading session. In front of you is the economic calendar. And as you can see, there are a ton of announcements coming out all over the place. Really, for our trading purposes, though, we really don't see much coming out of Australia that's worth paying attention to. Chinese industrial production could affect the risk-on, risk-off appetite of the markets in general, but truthfully, that will more than likely be a relatively calm experience. Probably won't have too much in the way of an effect on the markets. We do like the German Consumer Price Index number coming out, though. And the main reason is that the euro itself is in a lot of trouble. It's sitting right at pretty low levels. So if this is a strong number, it could give us a catalyst for a bounce that's quite frankly needed in that market. That being said, as the day goes on, we really see a lot of what we would call noisy numbers, in the sense that they can give you an overall picture, but most of these really won't matter. However, once we get to the UK, we have the employment change numbers. It's a 3-month number, and 270,000 are expected to be added. That, of course, will have quite a bit of an influence on the FTSE and the British pound. The British pound closed above the 1.68 level against the US dollar during the session on Tuesday. So that being said, the market could very well bounce and continue to bounce based upon a better than anticipated number. The FTSE is in desperate need of some type of guidance, and that number could move the FTSE as well, as we had pretty much a stalemate for the day. Looking at the calendar, really, we have the Bank of England inflation report, probably going to add more volatility to both the FTSE and the pound, but quite frankly, by the time we get there, we probably will have had enough information to act on. Advanced retail sales comes out of the United States, expected to be 0.2% for the month of July. Anything better than that could give a boost to the S&P, which quite frankly is in an area of consolidation, but has been walking up a trend line. So we would look to buy the S&P on a stronger than anticipated number. Should send the market to the 1945 handle, and then possibly higher than that. 1990 looking to break out. It's a staging area above, which would have us searching to break out above the 2000 handle. After that, we do have Dudley speaking on wholesale funding in New York. Very low priority unless he happens to say, hey, the Fed's going to raise rates. Doubt that's going to happen. The next number of importance, and they do have it listed as low, but not for the crude oil market, obviously. Department of Energy, U.S. crude oil inventories. If there is a low drawdown, that could be enough to push the WTI market much lower, as it sits right on support right now, which we will take a look at. Looking at the light sweet crude market, this is the light sweet crude oil index. It's a bit of a proxy. You can see, though, that we are consolidating here just above the 96.5 level, and a break below here based upon bad inventory numbers, meaning that we did not withdraw that much, could send this market much lower, really probably to 92. It would get ugly quick. 95 has a little bit of a psychology to it, but really below there, 92 is probably the real target. On the other hand, if we manage to break out above the 98.5 level, that sends us looking for 100. That would be on higher than anticipated demand for the day, though. Looking in Britain, we have the FTSE, which did nothing during the session on Tuesday, and those employment numbers, of course, can possibly, and the inflation number, have an effect on this market. It is oversold at this point, but there is a significant amount of resistance at the 6,700 level. So really, we have to see how we react and then perhaps get involved. Looking at the pound dollar, you can see we had a very strong session. We're back above the 168 level. Again, good numbers out of Britain sends this higher, probably looking for about 169 or so, and then possibly heading back to the 170 level. Sell-offs here probably only have room to go down to about 167, but it is a sellable event if the employment numbers are pretty poor. Looking at the euro dollar, you can see that we did in fact have a rather supportive day. We formed a nice looking hammer at an area, 133.50, that has been supportive lately. A bounce all the way to 134.5 is possible on strong numbers coming out of Germany, or even 135. Doesn't change the way the market looks to us, but it offers a short-term buying opportunity because we believe that the real support is down at 133. The S&P 500 fell a little bit during the session, but you can see we've been walking up this uptrend line, and now it looks like we're consolidating. A break above 1945, as mentioned previously, sends us to the 1990 level. And the market could, in fact, based upon the retail numbers, could potentially go higher. And with that, we've looked at the August 13th trading session.